Hi guys, in today's video we're going to look at the four major bullish candlesticks that gives you the signal to buy, or that signal you to buy, or signal you to enter the trade. In this tutorial we're going to learn this carefully so that you can stop losing or missing trade. So before I dive into this, if this is your first time coming across to this amazing channel, do what to subscribe, like my videos, as well as share my videos so that a lot of people can gain value from it. We'll be looking at the major candlesticks without a waste of time. I'm going to only mention the four major types or major parts or major pattern that every beginner must know and must practice how to use it. The first candlestick is the bullish engulfing. You can see the picture. I'll drop you all the picture to see so that you may actually understand and learn faster by the picture. So these are the four most common bullish or buy candles patterns you must know. I mentioned earlier bullish engulfing. We also have the hammer as second. We have the morning star as third, and we have the piercing lines. But let me explain them in details. But you must understand, or you must note, that for better trading results, you must not rely only on candlesticks. Candlesticks patterns alone will not give you the right signal. You must confirm them with support and also resistance. Support level is vital. You must also confirm the particular crypto trading volume. You must confirm the high trading volume. The RSI is also important. So the RSI must show oversold. I have dropped a lot of video concerning the RSI in the past, and I've also dropped some in the nearest time. You must watch carefully and understand. So these all confirmations can help you reduce false buy signals. Okay, now let's briefly look at what exactly is this bullish engulfing. Bullish engulfing always appear large green candles, and this large green candles always covers the previous red candles. It often signal buy and often shows that the buyers have taken control. They have taken the market control. So each time you see this, just attach it with RSI and also support so that you can get the right signal. So the second major candles I mentioned earlier was hammer. As the name implies, it always looks like a hammer. It is a candlestick with a small body and a long lower wick. So each time it appears after a downtrend, it mostly, or it can indicate a potential price reversal upward. So when you see something of this nature, watch it carefully, merge it with RSI and also support and resistance so that you can get the right buy signal. Then the third one we mentioned previously was morning star. This morning star is shining as the name implies. It always a three candle patterns that often mark the end of a downtrend. At the same time, mark the start or the beginning of an uptrend, which is a major reversal. So each time you see something like this, measure it with support and resistance. Check also the trading volume of that particular cryptocurrency coin so that you can get the right signal and avoid false buy. So without a waste of time, I will give you the fourth one so that we can actually get the fourth one and know how we can get prepared for a major trade or a profitable trade. All right, so the fourth one is piercing line. So a piercing line is a green candles that opens below the previous red candles, and when this one appears, it's always, when it appears, it's always above the 50% of the candles of the previous red candles. So it usually appears beneath or below the previous red candles, and it will go above the 50% of the previous red candles. Then you should know that something good is cooking. All right, so all those candlesticks must actually be measured by what? By support, and also must always be measured by resistance, and always must be measured by the total transaction volume or the trading volume. So as I said earlier, for better trading results, don't rely only on the candlesticks, which is what I said earlier. If you rely only on the candlesticks, you will get it wrong, and sometimes you may also get it right. If it has to do with cryptocurrency coin, nothing at all is guaranteed, but they have more than 70-80% of truth of working. So you must confirm them with the support level. You must also check the high trading volume of that particular cryptocurrency coin. Check the RSI as well, and the RSI must show oversold. The RSI must show oversold. And what is this oversold exactly? It means the RSI must be below 30, which is the first RSI. It must be below 30, and that alone does not guarantee it. You must compare it with the support and resistance, and also you must compare it with the trading volume, which is the high trading volume, so that you can get the right signal. Okay, so this support I always mention is very important. You must confirm the support if really you want to make a successful trade happen. You must confirm your support. Okay, support is actually a potential, because after seller push the price down, buyers enter aggressively and also wish to push the price back upward. So if the market revisits a particular area twice, and let's say 3 times, then that particular volume that the price always fall to, once, twice, and also thrice, it will now be called the support zone. So each time you see the support zone, then it is time for you to dive in, buy, and make something reasonable for yourself. So thank you for watching.